Thank you very much and welcome back. What we are discussing today and what we have discussed till now, we are discussing scope of the UAE corporate tax as of today. We have discussed taxable person, we have discussed exempt person, we have discussed out of the scope persons. Now these person, when we were discussing the taxable person, we were discussing the out of scope persons. There were two important things. These two important things were permanent establishment, and the second important thing was UAE-sourced income. So we will discuss these two things today. So first we will discuss UAE-sourced income, then we'll discuss permanent establishment. But before this, we'll go and we'll recap our previous sessions. So let's start the discussions. This is a recap of our first lecture. In our first lecture, we have discussed the persons. It can be exempt persons, it can be out of the scope persons, it can be taxable persons. We discussed that taxable person can be a resident taxable person, or it can be non-resident taxable persons. In the resident taxable person, we discussed the juridical persons registered in the UAE, the worldwide income will be subject to tax. Then we discuss the juridical person incorporated out of the UAE. If these are being controlled and managed from the UAE, then their worldwide income will be subject to tax. Then discuss natural person who is conducting the business in the UAE. Any income related to that business will be subject to tax in the UAE, or any other person determined in the decision. Then we discuss non-resident taxable person. In the non-resident taxable person, we discuss PE of the non-resident person in the UAE. It will be subject to tax. Any income related to any income attributable to the PE will be subject to tax in the UAE. Then we discuss that the non-resident person, if the non-resident person is deriving any state sourced income, it will be subject to tax in the UAE as well. Then we discuss if the non-resident person has any nexus in the UAE and income generated from that nexus, it will be subject to tax in the UAE. This was the first lecture. Then we discuss the second lecture. In the second lecture, we discuss what are the exempt person. These persons on which corporate tax will not be applicable. These were the government entities, government controlled entities, person engaged in the extractive business, person engaged in the non-extractive natural resource business, qualifying public benefit fund, qualifying investment fund, public or private pension or social security fund, a juridical person incorporated in the UAE, wholly owned and controlled by the exempt person. Then at the end, we discuss any other person as may be determined by the cabinet in the decision, it will be considered exempt persons. We said the colored in blue, these persons will be exempt from the UAE corporate tax automatically, and these persons, they will have to apply for exemption to the respective authority. In our third lecture, then discuss what are the out of scope persons. In the out of scope category, we discuss natural persons who are living out of in the UAE, are out of the UAE and has no business in the UAE. These natural persons will not be subject to corporate tax. Then discuss non-resident juridical person who doesn't have any PE in the UAE or UAE-sourced income, or they don't have any nexus in the UAE through which they are generating any income. They will not be subject to corporate tax. Then we discuss foreign PE of the resident person. Means if the UAE company has any PE out of the UAE and this company is applying that the income and expenses should not be considered, then it will not be subject to corporate tax. Any other like transparent partnership, we know that their income will be taxable in the hands of the partners. Funds which have been structured like not a legal entity, trust or family foundation, if they have avail the exemption, then they will not be subject to UAE corporate tax. These were the recap. These were our previous three lectures. Today we are discussing a fourth lecture. This is UAE-sourced income. We discussed the non-resident person. We discussed three different categories in the non-resident person. First category was the PE of the non-resident person. Any income attributable to the PE of the non-resident person, it will be subject to tax in the UAE. In the second category, we discussed that UAE-sourced income of the non-resident person will be subject to corporate tax than any other next. The two important things, one was the permanent establishment of the non-resident person. A second important thing was the UAE-sourced income of the non-resident person. These two things, it will not be subject to corporate tax. So what is UAE-sourced income of the non-resident person? Based upon this, the non-resident person will be subject to corporate tax in the UAE. So first of all, I would like to say one thing. Whenever I'm asking the non-resident person has any UAE-sourced income, then non-resident person will not be liable to register for corporate tax in the UAE. The income of the non-resident person, the UAE-sourced income of the non-resident person will be subject to corporate tax in the UAE under the withholding tax principle. And we all know this withholding tax is 0% in the UAE, but the person will not be liable to register in the UAE. So they said if the non-resident person is generating any income from the resident person, if the non-resident person is generating any income attributable to the PE of the resident person or activities performed, these are three different categories. First, if the person is generating any income from the resident person, it will be subject to corporate tax in the UAE. And if the non-resident person generating any income attributable to the non-resident person in the UAE, it will be subject to corporate tax in the UAE. And third category is if the non-resident person is performing any activities like assets are located in the UAE, capital is being invested in the UAE, rights are being used and services are being performed or benefited in the UAE. These are the different types of activities. If these activities are being performed in the UAE, then we will say the non-resident person is generating UAE-sourced income. These are the examples that given income from the sale of goods, income from the provision of services, contracts performed and benefited in the UAE, income from the movable or immovable property in the UAE, income from the disposal of shares, income from intangible property, interest income, insurance, a lot of ifs and buts regarding to this we'll discuss in detail. So at the outset, we can say that the three different types of income of non-resident person. If the non-resident is deriving income from the resident person, income is attributable to the PE of the non-resident person which is in the UAE, or the non-resident is performing any activities that has been mentioned here, then it will be considered that the non-resident has UAE-sourced income. So if the person is engaging a resident, it will be considered UAE-sourced income. We all know this, the resident person are three different categories. Resident person, it can be a juridical person established in the UAE, it can be a juridical person established out of the UAE, it can be a UAE business of the natural person. These are the major categories of the resident person. If the non-resident is generating any income from any of these three categories, then it will be said that the non-resident income is UAE-sourced income. So you will say that let's take this example. I have given one example there. This is the pre-limited. This is the Australia. This one company is in the Australia. The management of the company is based in UAE. If the company is in Australia, but the management of the company is in the UAE, then we will say that this is a resident person, because company has a management in the UAE, company itself is registered in Australia. So we can say this UAE-based company and this income of this Australian company, worldwide of this income of this Australian company will be subject to tax in the UAE. This we have already established in our first lecture. Now this is a one person. This is a USA company. This USA-based company is supplying any goods or any services to Australian company, earning any income. So once this USA company is earning any income from the Australian company, but at the end, this is a UAE-based company because this Australian company is being managed and controlled from the UAE. So the income that is being earned by the USA company from the Australian company, it will be attributed to the UAE and it will be subject to tax in the UAE. The same thing I have mentioned, pre-limited is registered in Australia. This is the pre-limited. Pre-limited is registered in Australia, but the management of the pre-limited is based in the UAE. So we can say pre-limited is a UAE-based company. This is a resident person. The worldwide income will be subject to tax. If the USA company is providing any goods or any services to the pre-limited, then the income of USA company will be subject to tax in the UAE because this income is attributable. This income has been derived from the resident person, UAE resident person. So this is the first category. They will discuss the UAE sourced income. Then the second category, if the income is being derived from a non-resident person and connected or attributable to the PE of that non-resident person. This is the UAE. Under the UAE, this is one PE of the non-resident company, and any income that is attributable to this PE. This is the PE, this is the UAE. Any income attributable to this PE, it will be subject to corporate tax in the UAE. It will be considered UAE sourced income. So I have given here the connectivity. The connectivity of the income is very important. If the income is connected with this PE, if the income is attributable to this PE, then it will be subject to tax in the UAE. Otherwise, it will not be subject to tax in the UAE. I have given one example. Sorry. This is a UK company. This UK company has a branch in the UAE. This is a UK company. This UK company has a branch in the UAE. There is a one Italian supplier. This Italian supplier is supplying goods and services to this branch, but getting this money from the UAE company. Then it will be said that, sorry, this is UK company. Since these goods or services are being supplied to this UAE company, which is a branch, so it means this Italian supplier is earning income from this branch of the UK company. Income is attributable to this branch. Even this payment is being made by the UK company to the Italian supplier. Still, Italian supplier will be liable to pay tax on this UAE sourced income, because this income is attributable to the branch, to the permanent establishment of the UK company. And the vice versa situation might be, there is a possibility that this Italian supplier is making any supply to any other branch of this UK company, but the payment is being made by this UAE company, or the payment is being made by the UK company, it will be out of the scope. But the important thing is, if this Italian supplier is supplying goods, if this Italian supplier is supplying services to the UAE branch of the UK company, means this Italian supplier is earning income from the permanent establishment of the UK company in the UAE. This is the reason that the income of this Italian supplier will be subject to tax in the UAE. However, if this Italian supplier is supplying any goods or any service to any third party, which is out of the UAE, and payment is being made by the UK company, it will be out of the scope. Hopefully everyone is clear regarding this. There is a possibility that sale of goods, the provision of services, execution and performance of contract, as we discussed, is the third category. First category, income is derived from the resident person. Second category, income is derived from the PE of the non-resident person in the UAE. Third thing is that the income is derived from the various activities like the sale of goods, provision of services, execution of performance of the contract. If these all things are happening in the UAE, then we'll say the non-resident person is earning UAE sourced income, and it will be subject to tax in the UAE. The further services, this is important that the services are provided, utilized, or benefited in the UAE. If these services are not provided, not utilized, not benefited in the UAE, then it will not be considered UAE sourced income. Just give one example. If a German company is supplying services to Z Limited in the UAE, Z Limited consuming these services in the UAE, then it will be assumed that the German company is generating income from the UAE. If the German company is providing services to any third party based out of the UAE, but getting paid for these services from the UAE-based company, it will not be considered UAE source income. So basically, only payment is being made from the UAE. If the only payment is being made out from the UAE, but the services are being consumed or services are being utilized out of the UAE, then in this situation, merely making a payment, it will not establish that the UAE sourced income. Interest will be considered UAE sourced income if the loan has been secured against the property or movable, either immovable, located in the UAE. If the property is located in the UAE, suppose, let's take this example, there is the UK bank. UK bank has given any loan to the UAE company, might be any other party out of the UAE as well, but against this mortgage, the property has been secured against this movable, immovable property. Loan has been taken against this movable or immovable property. If this property is in the UAE, even the lender is out of the UAE, even the borrower is out of the UAE, still the property against this loan is being taken. This property is in the UAE. So it will be subject to tax in the UAE. It will be considered UAE sourced income. As I mentioned, might be this is a UK bank. UK bank is giving a loan to the anyway USA company, USA company, but this loan is being given by the UK bank against a property which is in UAE. Then it will be considered UAE sourced income. It will not easy to track, but as given in the law, we need to respect it and we need to consider this provision of the law will be applicable as well. So then they said if the borrower is resident person or government entity, still it will be considered interest income. It will be assumed this is UAE sourced income. Then the insurance and reinsurance premium fall under the definition of UAE sourced income as well. If the insured asset is in the UAE, it doesn't matter where is the insurer, where is the insured party, but if the assets against which is being insured, if this asset is in the UAE, then it will be assumed this is the UAE sourced income, or the insured person is a resident person, insured activity is being conducted in the UAE, it will be assumed this is the UAE sourced income. So this is a frequently asked question. Just before going to the frequently asked question, I would like to recap for the UAE source income, 3 different categories. One is the income is derived from the resident person. Second, income is derived and this income is attributable to the P of the non-resident person in the UAE. Third category is income is being derived from the various activities like sale and purchase of goods, utilization of services, execution of contracts. Then we'll discuss insurance premium, we'll discuss interest as well. For all these income, we can say these will be considered UAE sourced income. And UAE sourced income will be subject to tax. If this UAE sourced income is being earned by the resident person, then it will be subject to tax 9%, up to 375,000 no tax, up to more than 375 will be 9%. If this UAE sourced income is being earned by the non-resident person, it will be subject to withholding tax and non-resident will not be liable to register in the UAE. So let's look into this example related to this. How are UAE tax residents subject to UAE tax? As tax residents are subject to tax for their worldwide income. We have already discussed this. So basically they said juridical person will be subject to on their income source, both the UAE and abroad, worldwide income will be subject to tax. Then how are non-residents subject to corporate? How are non-residents subject to UAE CT? Non-resident persons subject to UAE CT. These are the questions that were taken from the Ministry of Finance. So non-resident, how are non-residents subject to UAE-CT? Non-resident person will only be subject to UAE-CT if they have a PE in the UAE or income source in the UAE subject to 0% withholding tax. As we discussed there, if the non-resident will be subject to tax into 2 categories. If they have PE, it will be subject to tax. If they are sourcing income from the UAE, it will be subject to tax, 0% withholding tax, as we discussed earlier, or any other nexus that they have. We need to wait for cabinet decision that this cabinet decision will provide in detail definition of the nexus. So these are 3 different categories where the non-resident will be UAE subject to UAE corporate tax. Will an individual be subject to UAE CT and business income earned outside the UAE? Business income earned outside the UAE. If this individual is conducting business in the UAE, we have already discussed any income either earned locally, either earned out of the UAE. If this income relates to the business, then it will be subject to tax in the UAE. Will foreign companies and other juridical persons be subject to UAE CT? Foreign company or other juridical persons. Foreign company or other juridical person. We know this. Foreign company, if these are being controlled and managed from the UAE, their worldwide income will be subject to tax. If this foreign company has a PE in the UAE, their PE income attributable to the PE, it will be subject to tax in the UAE. If these foreign companies have earning any UAE sourced income, they will be subject to tax, 0% withholding tax. If these foreign companies have any nexus in the UAE, and this nexus will be defined in the cabinet decision, then their income will be subject to corporate tax. When will a non-resident person be subject to corporate tax? We have already discussed non-resident person will be subject to tax if they have a PE or if they have a UAE sourced income or if they have a nexus, 3 different categories. When will a foreign company be considered a resident person? Foreign company will be considered a resident person if this is being controlled and managed from the UAE. Can a foreign individual be subject to UAE CT as a resident person? Can a foreign individual be subject to UAE CT as a resident person? Yes. If this individual is conducting business in the UAE, then this individual will be considered a UAE resident person, and any income related to that business, either earned locally, even earned out of the UAE, this income will be subject to tax in the UAE. When will a foreign individual be subject to UAE CT as a non-resident person? Foreign individual, the first they ask the foreign individual as a resident person. Foreign individual will only be resident if this foreign individual is conducting business in the UAE. Then they said foreign individual as a non-resident person, foreign individual as a non-resident person will be subject to tax in the UAE if this foreign individual is earning any UAE-sourced income, and it will be subject to tax at 0% withholding tax. But generally, they are not subject to tax. It is very difficult to track them as well. What determines whether income is sourced from the UAE? We have already discussed three different categories are there. There's income derived from the UAE resident person, income derived from the pertain to the P of the non-resident person in the UAE, or income derived from the different activities, like activities can be assets located, capital invested, rights root, etc. So it was the first lecture, and I will take your question at the end. We will have a little bit long session today. Then we are going to discuss the permanent establishment. Permanent establishment, I will quickly go through the history of the permanent establishment. Basically the PE, the concept of permanent establishment was first seen the Persian industrial code. The Persian was a German state in 1845. Then the Persia and Saxony, they conducted the first ever tax treaty to avoid the double taxation. In 1909 used in the German Double Taxation Act to stop double taxation. Then League of Nations adopted this concept in 1928. In 1963, the first draft double taxation convention. Then just quickly, from 1845 till 1963, there was a somehow concept of double taxation was being discussed, and the concept of PE was being discussed. At the end, in 1963, OECD, Organization for Economic Cooperation and Development model was adopted, and based upon this, they said first draft double taxation convention was introduced. Then UAE public consultation document that were introduced in Jan 2022. All this based upon this basically OECD model of double taxation. So in 2022, UAE Corporate Law was announced in the UAE on January 31st, 2022. It was containing the same model. And in the same year, 2022, UAE Corporate Tax Law was introduced again. Basically, the foundation of the law is OECD model for the related to the PE. This PE is very critical, important concept. Basically, we need to establish either the company has a PE in the country or not. If the country has any PE in the respective country, the objective is basically any income related to that PE, it should be subject to tax in the it should be subject to tax in the respective jurisdiction. If this income is being generated from, suppose, Saudi Arabia, related to that permanent establishment in Saudi Arabia, it should be subject to tax in Saudi Arabia. If this income is being derived in UAE, it should be subject to tax in UAE. If this income is being derived in USA, it should be subject to tax in UAE. Objective is from where this income is being generated, it should be subject to tax in the UAE, and there should not be any double taxation, because if this income is being subject to tax in UAE, might be the parent company, where the parent company is located, the laws of that country say that it will be subject to tax in that country as well, but then the foreign tax credit provisions will come. Ultimately, there will not be any double taxation, but from where this income is being generated, it will be subject to tax in the respective jurisdiction. Just look into this. This is the USA, this is the UK, this is the parent company, this is the branch, If this branch is earning any income from the USA, it will be subject to tax in the USA. Now the UK law says, okay, the worldwide income is subject to tax of this parent company. So when this income of the branch will be merged with the UK company, then UK company will give a foreign tax credit. The same principle is applicable for the UAE as well. If the UAE company has any branch out of the UAE, it will be subject to tax there. It will be subject to tax in the UAE. But when the UAE tax will be calculated, the UAE foreign tax provision will be applicable. So objective is basically where the income is generated, it should be subject to tax in the same jurisdiction. And if any taxes are being paid in that jurisdiction, then the company needs to take the foreign tax credit. So OECD model is the common basis for defining PE internationally and is implemented in nearly 3,000 tax treaties. The Article 5 of the OECD model convention deals with the permanent establishment used to determine the PE in the United Arab Emirates as well. So permanent establishment, it has been given in the Article 14 of the UAE Corporate Tax Law. They said basically the permanent establishment can be established. This permanent establishment can be established due to three reasons. First, there is a fixed or permanent place of business. If there is a fixed or permanent place of business, we can say the non-resident person has a PE in the UAE. If the non-resident person has any dependent agent in the UAE and one person is exclusively working for the non-resident person, we'll discuss in detail, that it will be considered that the non-resident person has a PE in the UAE. And third category is any form of nexus that was specified in the cabinet decision, it will establish that a non-resident person has a PE in the UAE. But if there's some exception, if this auxiliary sporting services are being provided in the UAE to a non-resident person, it will not establish PE, that we'll discuss in detail. So let's start our discussion. The first one is basically fixed or permanent place of business. So if there is a fixed or permanent place of business of the non-resident person in the UAE through which the non-resident person is conducting the business activity, then we will say that the non-resident person has a PE in the UAE. So when this fixed or permanent place of business will be established, they said if the non-resident person has any branch, if the non-resident person has any branch, office, factory, workshop, land, building, any other real estate property, or any building sites, assembly sites, construction sites, which runs more than 6 months, then it will be assumed that the non-resident person has a PE in the UAE. You need to be careful. They have not used the word subsidiary. Is subsidiary of the non-resident person in the UAE. This subsidiary will be considered a separate standalone company, and it will be considered a resident company. But we know that the branch, this is the extension of the parent entity. Branch has not itself a separate legal entity. So branch will fall under the definition of PE, but the subsidiary will not fall under the definition of PE. So any office, factory, workshop, land, building, all these things, if the non-resident person has all these things, and these things are being used to conduct the business of the non-resident person in the UAE, then it will be assumed that the non-resident person has PE in the UAE. Further, they said any installation or infrastructure used in the exploration of natural resources, mines, oils, gas, wells, quarries, and other places of extraction of natural resources will also be considered PE of the non-resident person in the UAE. This is the exception. Any preparatory or auxiliary activities like limited marketing, promotion activity, performing market research, attending seminars, conventions do not fall under the definition of PE. It has been given in the UAE Corporate Tax Law as well. The fixed or permanent place used to keep, store, display, or deliver the goods of a non-resident person shall not be assumed the PE of the non-resident person. These all are basically exceptions. These are auxiliary or sporting activities to the non-resident person. If these auxiliary or sporting activities are being provided to the non-resident person, then it will be assumed that the non-resident person has not any PE in the UAE. There's one important thing it has been given in the law. They said basically there are two different sites, multiple sites. It can be multiple sites as well. One site, this site is providing sporting activities. This site is providing sporting activities. Then other site, this is a PE. Same person, same non-resident person in the UAE. One site is providing only sporting services. Second site is a PE of the non-resident person in the UAE. In this situation, the law said very clearly, if the non-resident or its related party has any other PE in the UAE, which the business cohesive integrated operation with the figure. This basically, this PE has integrated operations with this sporting site. Then in this situation, on overall basis, this sporting site and this PE are, and this basically, this fixed establishment are not providing any auxiliary or support services to the non-resident person, then it will be assumed that the non-resident person has a PE in the UAE. Basically, there are two sites. Sorry, let me clear it again. There are two sites. One site is providing sport services, other sites is conducting business or business activity on behalf of non-resident person. Both of the sites, when we look on overall basis, both of the sites are not providing ancillary or sporting activities to the non-resident person. Then it will be assumed that the non-resident person has a PE, and this sporting site will be considered PE as well. So hopefully it will be clear to everyone. Then dependent agent. So the concept, the first thing was basically fixed a permanent place of business. Second thing was agent or person who habitually exercises or concludes contract on behalf of non-resident person in the UAE. So I just classified the agent. It can be two types of agent. It can be a dependent agent. It can be independent agent. For the who is acting on behalf of the non-resident person. If someone is a dependent agent who is exclusively working for the non-resident person, who concludes contract on behalf of the non-resident person, who negotiates contract on behalf of the non-resident person, and non-resident person is approving those contracts with minor modifications or without any modification, then it will be assumed that the dependent agent is exclusively working on behalf of the non-resident person. This dependent agent has the authority, controls, powers to negotiate and act on behalf of the non-resident person. Then it will be assumed that the non-resident person has a PE in the UAE. But if there is a one agent in the UAE who is acting on behalf of the non-resident person, but this agent is working independently, charging fees to the non-resident person, not exclusively working on behalf of the non-resident person, cannot conclude contract, cannot negotiate contract, don't have the power, then it will not be assumed, that resident, non-resident person has a PE in the UAE. So basically two things: if the dependent agent acting exclusively on behalf of the non-resident person, negotiating contract, concluding contract, then it will be assumed that the non-resident person has a PE in the UAE. On the other way around, if this is independent agent, then it will be assumed that the non-resident person has no PE in the UAE. Hopefully it will be clear to everyone. Working independently, normal course of business, it will not be considered a PE of the non-resident person. It has been given in the law. Normal course of business, someone is acting a normal course of business, then it will be assumed that there is no PE of the non-resident person in the UAE. Subsidiary, I will discuss in a previous slide as well. Subsidiary will be considered separate legal entity. However, if the subsidiary act as a dependent agent of the non-resident person, then it will be assumed that the non-resident person has a PE in the UAE. This is basically a lot of ifs and buts, a lot of interpretation regarding the PE, and I have tried my best to put everything in front of you. So two things we have discussed for the PE. First, fixed or permanent place of business. Second, if any person in the UAE, this person can be individual, this person can be company as well. If any person in the UAE who habitually exercises and negotiates contract on behalf of the non-resident person, it will be assumed PE of the non-resident person. And third category is basically whatever has been mentioned in the cabinet decision, and we need to wait for the cabinet decision. These are the frequently asked questions given on the side of Ministry of Finance. What are the preparatory and auxiliary activities? We have already discussed storage, display, delivery of goods, merchandise, limited research, limited marketing services. If all these services are being provided to the non-resident person, it will be assumed sportive activities. It will not establish PE of the non-resident person in the UAE. Will foreign companies, other juridical person be subject to UAE CT? Foreign companies and other juridical person, this, yes, it will be subject to tax if these foreign person or juridical persons are being controlled and managed in the UAE. If these have the PE in the UAE, if they have the UAE sourced income, it will be subject to tax in the UAE. Then will a non-resident person be subject to CT? Non-resident person, we know that we discussed 3 different categories for the non-resident person. PE, UAE sourced income defined in the cabinet decision, it will be subject to tax in the UAE. How do I know if I have a permanent establishment in the UAE? We have discussed 3 different things: fixed or permanent place of business. Second, we discussed if someone habitually exercising authority to conduct the business on behalf of non-resident person are defined in the cabinet decision. Will the investment in UAE real estate constitute a taxable permanent establishment? Investment in the real estate. Investment in the real estate of a non-resident person. Non-resident person has investment in the real estate. Will it be considered that non-resident person has a PE in the UAE? Not at all. The reason is basically when someone is making the investment in the real estate, it doesn't fall under the definition of business. Once it doesn't fall under the definition of business, so it will not be assumed that the non-resident person has any PE in the UAE. There is the investment, any foreign individual that owns property in the UAE in his or her personal capacity would generally not be subject to UAE CT and related company obligation, related compliance obligation. The investment in real estate by a foreign juridical person may give rise to the taxable permanent establishment where the real estate fixed place of business. Again, this is the same thing coming. Basically, if the property in which the non-resident person has investment, if this property is being used for the business purposes of non-resident person, then it will say this is the PE of the non-resident person in the UAE. If this property is not being utilized for the business purpose, merely investment in the real estate, which is not being used for any business purposes, so it will not fall under the definition of PE of the non-resident person. These are tax team. You can coordinate, you can give us a call, you can drop us an email. My name is Mahar. My colleague Faiza Hashmi, she's our tax director, and Mahar Anwar, he is a tax manager, and Saqib Salim is assistant manager tax. If you have any question, you can drop us an email, you can give us a call as well. It will be a pleasure supporting you. We listen, we understand, and we deliver. So our phone number is given there, our email address is given there. If you have any question, you are most welcome. Thank you very much, guys. This is over from my side. So if you have any questions, very good. I have 39 participants today. Lovely to see you. So questions, okay. Okay, let me go through the question one by one. A travel consolidator incorporated in the UAE earns commission from the hotel bookings and car rentals. Attraction tickets booked sold through the e-commerce portal for the commission earned for total booking made in the UAE, or instances does this entity liable for UAE taxation? Okay, let me read it again. A travel consolidator incorporated in the USA earns commission from hotel booking, car rentals, attraction tickets books. For sure, this is falling under the definition of UAE-sourced income because all these activities are being performed in the UAE. If these activities are being performed in the UAE, it means the person is earning UAE-sourced income. It will be subject to 0% withholding tax, and the person will not be liable to register for corporate tax purposes. Second, we get a portion of the commission earned by the USA company since we do marketing for their portal here in the UAE. Does the commission subject to UAE VAT? We are discussing corporate tax, my friend. We are not discussing VAT. I am discussing, okay, you can, okay, if you are asking VAT, you are earning, you are providing basically marketing services in the UAE. Services are being performed in the UAE, the place of supply of the services in UAE, so it will be subject to VAT as well. We cannot classify as zero rated. This is a big basic discussion among the consultants, and we are read it again and again. We have interpreted it as it because services are being performed in the UAE. Place of services in UAE should be subject to VAT. So Usha is asking how these foreign-based company will pay corporate tax in the UAE because there is no withholding tax. There's 0% withholding tax. I personally feel very soon they will introduce certain percentage of withholding tax as well. This withholding tax, it will be paid by the customer of the non-resident supplier. They will withhold it, they will deposit it to the government. It will not be obligation of the supplier who is based out of the UAE to pay the corporate tax, but the customer will be liable to pay corporate tax, withhold and pay to the government. told me if a foreign entity supplies material or services to the UAE company, if a foreign entity supplies material or services to the UAE company, does it matter if the UAE company is a free zone or mainland? Will they affect the qualifying? Okay, we have we are yet waiting for definition of qualifying free zone income and non-qualifying free zone income. Once this will be introduced, what is qualifying income? What is non-qualifying free zone income? Qualifying free zone income will be subject to tax at 0%. Non-qualifying, it will be subject to tax at 9%. We need to wait for this definition. If the non-resident supplier is supplying material or services to the free zone company or the mainland company, for sure it will not fall under the definition of qualifying free zone income, but for the free zone company we need to wait will fall under the definition of free zone person or not, qualifying free zone income or not. If I am a resident in the UAE, have some shares in the company conducting business in the UAE, the only and own individually real estate that generates return rent, is rental income will not, is a personal income, it will not be subject to corporate tax. Where other forms of nexus of UAE, it has been given in the law. Basically, they will define what type of nexus for the PE. We need to wait for it. If there are any difference in tax obligation between PE of the foreign company and subsidiary, I have already discussed basically subsidiary of such foreign company. Subsidiary is a separate legal entity and it will be subject to tax for their worldwide income. PE will be subject to tax for any income attributable to the PE of the foreign company in the UAE. One more question, Al Midan free zone. Some entities have been registered there, but there is no office. So they move their employees to the mainland, how the entity will be applied. So basically they are saying if a so where is gone your question? Just wait, please. Al Midan free zone, some entities have been registered there, okay, but there is no offices. Entities are registered, no office, so they move their employees to the mainland. How the city will be applied? How the city will be applied? I'm so sorry, I couldn't take your question. How the city will be applied? CAT, might be you are supposed to mention corporate income tax. So basically, free zone person, employee on the mainland. It doesn't matter basically if the company, the free zone company, we need to respect the commercial laws of the land. If the free zone company, how they can move their employees to the mainland. Anyway, we need to look into the scenario. In case we have the proper scenario in front of me, then I would be in a better position to advise you. Shlomi Rahul is asking further, if the PE of the non-resident person established in the UAE, this will have different tax rate, or if the PE established to be in the free zone, no, the tax rate will be same. We need to look into the qualifying free zone income or non-qualifying free zone income. If qualifying in free zone income, as I mentioned, 0%, non-qualifying 9%. I guess I got my answer. It's fine. Thank you very much, Sylvie. Kamran is asking, sir, recording and these lecture notes to be provided. Recording you can find on our YouTube channel. We will upload it maximum by tomorrow. You can get all recording there. Wakil Khan, Wakil is asking, if a group have a head office in the UAE, so effectively all the business decisions are done in the UAE, all the companies in the group, whether the company is registered anywhere, all such companies fall in the UAE for city. What about the offshore companies that are owned by the UAE residents? All of them is falling under the UAE. We will discuss basically if we need to look into this. If this is a resident person, juridical resident person established in the UAE, then the worldwide income will be subject to tax. But if this juridical person is paying any tax out of the UAE, those taxes will be adjusted under the foreign tax credit. And second, you asked, what about the offshore companies that are owned by the UAE residents? If the offshore companies are owned by the UAE residents, offshore companies that are owned by the UAE residents owned offshore company, it will not be subject to tax in the UAE, because if the companies are offshore out of the UAE companies and these are owned by the resident only, owners are the resident, it will be subject to tax where these companies are registered. All of them is falling under the UAE? No, not at all. Basically, we need to stick to the The very first slide where we have mentioned basically what are the resident person, what are the non-resident person. We need to stick to it and we need to apply the definition accordingly. So anyway, thank you. And one more question. Thanks for answering. Anyway, you are most welcome. Sir, certificate will be issued upon completion of this webinar. No, we are not issuing any certificate. This is just creating the more awareness and so that people will be able to implement the corporate tax smoothly in their system. We are not issuing any certificate. In case we are doing anything like this in the future, for sure, we'll let you know. Muhammad Mishal, if withholding tax is deducted by one of the customers, Saudi, if this income is gain taxable here in the UAE? No, I said basically if your company is paying any tax out of the UAE, it will fall under the definition of foreign tax credit. Basically, whatever your income, again, you will apply 9% tax, whatever the total tax and whatever the tax that you are paid out of the UAE, maximum government will allow up to 9%. Government will not allow anything more than this. So it will be adjusted in your credit. Assuming you have an income of 100, if you have an income of 100, you are paying 9% here, might be you are paying 20% in Saudi Arabia or 10% in Saudi Arabia. At the end, you will not pay any tax in the UAE, but you will have to submit the return where you will say total tax 100 into 9, then foreign tax credit 9 nil. You will not be liable to pay any tax in the UAE, but you need to submit a return where these items needs to be categorized properly. Okay, anyway, all questions are over. If you am not, I'm not able to address your any question properly, you can drop me an email. For sure, I'll come back.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.